Great to see you this morning, and thanks so much for taking some time, Marija. First and foremost, just want to get your reaction to some of the market nervousness that we were just breaking down a moment ago that's played out over the course of this week.
Yes, I think market is very much concerned with kind of this idea that all of a sudden we're getting. Actually, let me take a step back. Market was very focused on this kind of soft landing idea. Data softening, inflation coming down, we're going to get cuts, but like earnings are fine. So that was kind of the major story. And more we're getting the data being a bit stronger, inflation surprises on our upside, and we are repricing Fed cutting expectations. So that's not great for risk assets.
When it comes to some of that
kind of the story.
Yeah, Marija, when it comes to some of that risk-off sentiment that we have seen, though, play out in the markets this week, is that something that you see continuing into next week, or will we see maybe earnings that have come in better than expected reassure some of the skeptics out there?
Yeah, I think I'm very much looking at like earnings, and particularly like next week we have a big tech week, which is hopefully like one part of the market that consensus is very constructive on. That's part of the market that may be less affected by rate hikes, as companies are larger, balance sheets are stronger. So that's potentially something where can kind of put floor under the stocks.
Have we started to hear a firm theme emerge over this earnings season from your perspective?
I mean, so far we mostly heard from banks, and the stories are actually, I would say, probably less encouraging. So we're hearing like banks are, I mean, quite a lot of them beat the expectations, but it's very much in kind of trading revenues, in kind of wealth management, asset under management stories are quite strong as markets are strong. But under the surface, we're hearing about things like loan growth is slowing. We're hearing the cost of deposits, cost of business is rising. So I think for banks, it's kind of okay, but read across the broader economy may be a little bit more challenging.
So where are you seeing investment opportunity? What should investors be doing adjustments, making to their portfolio in order to better position themselves for what sounds like some uncertainty ahead?
Yes, I mean, unfortunately, there's probably less to do for investors. So we expect to see this kind of the big trend of large caps outperforming small caps. So that's probably our kind of key focus, key differentiating factor between sectors and factors, is that like larger companies and companies with better margins can withstand this kind of downturn a little bit better. And that's what investors have been doing already. So like technology, energy stocks, kind of mega caps, that's doing well. That's where big positions are. Companies with kind of more lower margins are really struggling. Your staples, your healthcare stocks, they're under a lot of pressure, and that's likely to continue, in our opinion.
Just additionally here on one asset, gold. I mean, is there still legs to the gold spike that we've seen?
I mean, unfortunately, we're seeing no end of kind of geopolitical tensions, and I suspect that's supporting this trade. So, yeah, sadly, probably more like there.
All right, Marija Veitmane, thanks so much for joining us here at Yahoo Finance. Great to have you. State Street Global Markets Head of Equity Research.